Hey guys, and welcome to another episode of Trading Takes with myself, Chris, and we have Judah here today. Sam is not on this week. We can only imagine that he shanked a golf ball and he is going to be looking for it for the next couple of weeks, but he'll be back on soon. So today we have a great episode. We're going to be talking about market cycles. We're going to be talking about earnings season, 24-hour trading, and for that we need a special guest. And this week, we have the honor of having Kunal Desai on with us. So, Kunal, welcome to the show.
Hey, bros. Good to have you.
Thanks.
I'm
Thanks
glad to be on.
Yeah, it's great to have you on. And we've both met you in person. Judah has some great stories with you from a couple of years ago. Judah, so Brian Lee gave you a ticket to the Chainsmokers, and tell us about that night.
Yeah, I was sitting on the blackjack table. It was like 3 a.m. Tapped me on the shoulder. He's like, "I'm going to bed. I have a wristband here for Chainsmokers, front table right in front, Guardian." And he gave it to me. I went, and me and Kunal were just talking all night, speaking as loud as we can over the speakers. But we chatted for like a few hours in that club. We had good conversations.
Yeah, we did.
That's awesome. Yeah, and Kunal, we've been wanting to get you on for a while now, so thank you for finally agreeing to show up. And we got a lot of great topics tonight. So, but before we get into that, could you just give the audience a little bit of an intro about you, how you got into trading, and just who you are?
Yeah, Kunal, Nate is one of my oldest trading friends. We both started our businesses the exact same year, so we've been friends, competitors, peers, brothers, all of it. We both started in 2008 in launching these websites. And so we've kind of been lockstep along the year. So I know you guys pretty well. I started Bulls on Wall Street in 2008. I was trading professionally for the couple years before that and been attempting it even before that. I'm not that old. I started at just a young age, and I've been hacking at it really ever since. And I've never slowed down because this is my life's passion and the funnest, the most rewarding thing I do in my non-family life.
Yeah, and I know that I've listened to other interviews with you, and you talked about how your dad was always, into like different entrepreneurial ventures, and you gave a hilarious story about like when you were trying to, get into trading and like what your mom was saying and like, trying to talk you out. And could you do that impression of your mom basically reacting to you going into trading?
Oh my God, Kunal, what are you doing? Your cousin Bhavin is a doctor. That is Dr. And you are going to be doing this computer thing? Not even engineer.
Oh man, I was losing it when I heard you do that a while ago. But yeah, I mean, trading, you've been trading for 20 plus years, about 20 years now, right?
Yeah, it has been a long road. I mean, I really started just a couple of years. I started full-time a couple of years after college, but I've been attempting it from the college days to, about 25, give or take, and just on and off while I was working, building a bankroll. And then I went full-time a little bit right before the 2008 crash, and then I've just been hacking at it really ever since, trading trends, momentum, switch styles quite a few times, and just still hacking at it to this day, trying to find edges in the market wherever I can.
Yeah. And that's one of the things that I always appreciated about you and, what I've heard in interviews and from other people is that you're just, and I get this sense from people who have been in the market for a very long time, is that you're so good at categorizing things. And so like a lot of traders, they're just, they show up to the market, they see if something's moving, can I make a trade of this? But you have everything mapped out from like, what kind of market are we in? Is it a bullish market? Is it a neutral market? Is it a bearish market? Is it a morning setup? Is it a bull setup, bear setup, red to green? You have all these things laid out. Were you always really good at like categorizing trades like that? Or was that something that you kind of learned along the way?
That is something I learned along the way. You do pick up like a basically new strategy probably every year or so, right? Some new tricks to the trade. So you start stacking it on. But, just like we have like, in the world, you have like millennials, Gen X, Gen Z. In trading, we have like what I like to call like the trade ideas generation, right? There's a whole generation of traders and, influencers or people that use Twitter that just, hopped on trade ideas for years and looked at gappers and top gainers and then just did right? Break of pre-market highs or break of opening range. And that's all they did for a long period of time, right? And it worked really till about 2022, right? So you had those COVID years where stuff like that worked. And so you got this 4-year block of people that was this trade ideas generation. That's all they did. They were one-trick ponies. And then what happened in 2022 when the tech market and, right, the bubbles of SPAC and everything else deflated was that, well, that was really the worst setup you could do, right? It's usually those setups were actually the shorts, right? Those were the liquidity traps. And so the market cycles, always change. And so you learn those things over the years that, what is hot one year often is not hot the next year. And so having a toolbox and a playbook of setups that you can use in any market cycle is just important. And really being able to identify just small things that are happening in the market where big impactful things are happening is a big edge, whether it comes from memory or just data collection. For example, right now, right, we see this is, I think in this past year we're seeing it, right, like the big outlier moves are on just Fridays, right? Like you have these anecdotal things like SMCI, Nvidia, gold, silver, right, whenever these things pop, they're happening on Fridays. Right? Why is that? Okay, we can come back and say, maybe it's the options people, the 0DT people, but this is something that's happening, right? So being able to prioritize and categorize when you see opportunities and it's matching with what exactly has been working of recent is where the big bucks are going to be played, because, you can only draw so many squiggly lines on a chart and get your 2-3%. But at some point, right, you got to be ready to pounce on the big boys. And so being able to categorize and qualify when setups are really going to work is, that's the name of the game.
How'd your strategy change over time from when you started out until today?
Mine is pretty much almost everybody goes through a very similar arc. If you're finding stocks through social media or anything online, you're probably starting in small caps because that's where the slickest and best marketing is. Right? That's where the pull of big gains is. But the marketing for small caps is just geared towards young people and people with small accounts and people with big city dreams, right? You got big city dreams. And so almost everybody comes through in that avenue of it. But that market is also, right, has the highest failure rate probably out of, all the different strategies that you're going to be doing. For example, if you were just swing trading, Dow stocks, right? You're probably not going to blow up your account. You may not make any money, you might probably make zero money, but you're not going to blow up your account, right? And so everybody starts in small caps, but the failure rate of that is high, and so is the stress rate. So over time, even if you get good at it, you tend to gravitate towards other things, but also it's just not a very scalable strategy for the most part. It is very fun to trade it with 30, 40, 50, $60,000, maybe even more. Nate does it, but I don't have that kind of discipline. But, it's really hard to scale it into okay, if you are trading $500,000, you really trading $2, $3 stocks all day? Probably not, right? You can only put so much money into it. It's not infinitely scalable. So at some point, as you just get older, you grow and you want less stress, you're going to be moving into different types of stocks. And then, what the cool thing is of the last few years is, the algos and stuff have made trading so much easier, not in terms of your day-to-day easier, but there's types of stocks that are moving that you can day trade now that 10 years ago were not really in the equation. Like when I started trading, looking at a stock's float was so important. Before it became right a marketing term to make you seem like it's smart, right? 10, 15 years ago, we were always checking the float. Okay, what's the volume? What's the float? Man, these kind of names can move because your high float stocks just could not really move even more than 1% a day, right? Now, I don't care about the float at all, right? You can look at the ATR of a stock and there are high float names that might move 10, 15 points in a day. And there are low float names that might not move at all, right? And so that's changed a lot over the years. And so you're naturally kind of gravitating, your style, but the algos have made it so that you can trade, a lot of these bigger names that were really untradeable before.
So is there a minimum now that you have in terms of dollar, either the dollar or you don't trade anything under $5, or is it more market cap? How do you decide?
No, I'm still human. So every blue moon, if the youngsters in my chat room are talking about it, I'll still give it a whole whirl just for good old time's sake. But it might be like I might throw 5,000 shares out of it, right? And just scalp around for some fun. It's not going to be like a bread and butter that I'm just like, all right, like this is, I'm gonna risk my whole daily, max loss on this, or even a quarter of it. It's something you might do for just some fun, for scalping, for a little bit of income, just to be a part of the game, because it is fun. But it's not for me. It is not a scalable thing, because I also like just getting rugged and stuff like that. It just puts me in a foul mood. It really is. It's just, I'm not built for that kind of stress anymore. I'm 43 years old, and it's like, it really just, dude, it just pissed me off. There's nothing worse than getting rugged. It really is like,
And
it
your
just ruined my damn
trades,
day.
your main trades are swing trades, or do you take like those breakouts, but like you'll exit after a day or two?
I'm almost all day trading at the moment. I would say 95% of what I do is still day trading. I'm still swing trading because you got accounts that you just can't day trade in, right? Like, if you have IRAs or, things of that nature, long-term accounts, like you've got to be able to swing trade at some point. And I actually think to be a good day trader, you really need to be able to swing trade anyways. But most of my trades are going to be geared towards day trading, and probably the first 2-3 hours of the day.
It's funny because the setups that you take, a lot of the times I see them and they follow through on the daily, and like they're powerful, good looking daily charts. So to say that like you're day trading them when like you see like after the follow through, it's like, how that regret that you might have. Do you care,
Yeah.
or do you just move on and take the next? Because every day there are new setups. You could either trade them and sit in them, or you could keep rotating and finding powerful daily charts, but just taking them for just that one day and moving on and rotating.
One of the biggest mistakes that like new traders will do is they just trade like what's hot, right? And so, oftentimes the best day trades, at least in terms of consistency, is to have something that you have like a bigger picture thesis on. And then you say like, okay, this is day tradable, right? So like, for example, like, you have something like NVIDIA, right? When it broke over 500, right? Like it'd been sitting in a range for like 6 months, right? So, your measured move is if something bases out for 4, 5, 6 months, the next, the measured move is also going to be multiple months. So what is the best stock to day trade? Something that you think actually may go out and double or triple or go up 20, 30% over time. That's going to put the wind at your back. You don't have to be picture perfect as a day trader if you're picking the right names on the big picture that you have some type of thesis about. Now, obviously, in small caps, it's a little bit different because they're all turds, like, and then they all are returning where they started. But like if you're trading mid caps, earnings breakouts, any of that kind of stuff, then having the wind at your back is going to make your day trades a lot easier. And yeah, frankly, of course, if you look at a stock and it's like, is at 20 and like a few months later, it's at 80, you're like, shit, like that would have been nice to just hold it. But that's the lot of a day trader.
Mm-hmm.
Yeah. And I also think that that's been a change in the last couple of years, where I feel like in the past, it was like most of the volatility in the action was in small caps, and like the blue chips were like much more slow and steady. But I feel like since COVID, a lot of the large names, they've started to move a lot more like small caps. And I mean, things like SMCI or other names that will move 18, 30% in a day. I mean, several times a month. I feel like, have you seen that? Or like, since you've been trading, do you feel like over the last couple of years that's been happening more, or has it been like that?
It is definitely happening more. You can probably attribute it to the options traders in some manner. Between that and the algos, they can't trade some of those other things, right? But between the options traders and the algos, you're just getting incredible pushes. But also, we've just become a market that is it's more specific, meaning it's not been the last couple of years like a broad-based market where you have like huge amounts of market breadth. So if you track like, hey, how many stocks are breaking out, every single day or every single week or every single month, the number is quite smaller than it would have been a few years ago. So when you have a market that's a little bit more centralized, where all the action's in a specific sector or a specific type of stock, then you also get these outlier moves. If you look at market breadth of 2023, all the gains were in, right, just a handful of tech stocks, right? Your Magnificent Seven, and then your SMCIs, and so on and so forth. So when you have such a concentration too, then you're going to get the outlier moves because everybody's piling into the same damn names.
Yeah, definitely. It always reminds me of like the Pareto principle or like the 80-20 rule, where it's like if you just keep doing that again and again, you get down to like such a small fraction accounts for almost half of everything that moves. And it's really the case with like the Magnificent Seven stocks, where it's, yeah, you have, call it 10 or 15 stocks that are responsible for probably 50% of the moves in the market. I mean, it'd be like, in basketball, like you have like LeBron James basically driving the league and like a couple of key players, but it really has been amazing to see how that's happened.
Yeah, and we've gone through, we've had years like this in the past, and I believe 2015 and some other years where, the market is just super narrow. It doesn't last, it's not a forever thing. It always feels like a forever thing in the moment, but these things change, in a hot second. At some point, people are tired of paying the piper for, XYZ stock, and then something new comes out, something new hot comes out. You never know what stock's going to have the new technology, the hot earnings, whatever it might be, and then you're starting, a whole new type of sector.
Yeah. And so it was funny how earlier you brought up, like the social media promotion, the small caps. It feels like so many traders, they get into trading, the kind of the same way. But do you think that it's easier to, for a new trader to start now because there's so much information, or is it harder to like sift what's good from what's bad? Is it harder for people to start now?
I think trading is actually probably easier now than it was before. But in the beginning, it's still harder to start because there is so much information out there and so many classes and so on and so forth. 15 years ago, if you wanted to learn a trading class and you were going through online, right? It was like you're coming to my place, Tim Sykes's place, Nate's place. There were like 3-4 places, right? Mm-hmm. And so it's really just finding your niche. Like me and Nate used to send each other customers all the time. Like it'd be like, dude, I don't do any of this kind of shorting, go over here and check these guys out. Right. And he'd do the same. Like, hey, we don't do any swing trading or large caps. Go check out Canal. So there was like, only a handful of places out there. So you knew like where to go. I mean, now it's like, you got kids that are like 19 years old. They got braces and they're out there like, hey, man, my life has just changed. I never thought when I dropped out of high school at 13 that I could make $2 million doing SPY options. And right. And people still fall for that. Like, even adults like 50, I run into people, they're like, yeah, man, I bought this thing. I'm like, you're 60 years old. Like, how would you fall for that? Right. And so there is a lot of that going on. And so it is like harder to find the right information. But if you do find it and you find your niche and you put down that initial legwork, then probably your odds of success are going to be a little bit higher because there are advantages now. Not having to pay commissions is a huge advantage. My commission bills used to be, 50, 60, $70,000, 10, 12 years ago. And I wasn't trading like millions of dollars of capital. Mm-hmm. Dude, you make 20, 30 executions an hour when the market's hot, throughout the day, and you're paying $5. Shit adds up, so you don't have those things. And yeah, of course they're gaming the bid and ask and stuff like that, but just not knowing you're not paying them is enough to like kind of dodge some bullets. And so you do have like these kind of things. You can trade options now, right? You can trade indexes now. Like nobody was trading freaking indexes unless it was futures trading, a few years ago, right? So now you can trade QQQs and SPY and IWM. And so you have so many cool instruments to trade too. Even for us old guys, like it's like, this is a new world out there. Like I've added so many new flavors to my style of trading the last couple of years, and it's exciting.
Yeah. And it struck me when you said that, at the beginning, just kind of in general terms, you add a new setup, once per year or something like that. And I feel like to people who are a little bit newer, that might seem like, oh my gosh, you only have one style or one setup that you learn per year. But I mean, it's like, how many do you actually know so well, so, in and out, and actually to be able to consistently make money off of it? And I just think a lot of new traders, they don't realize how much it takes to really master a setup. I mean, yeah, like for you, like how do you go about learning a new setup, or like how long does that process take usually?
I mean, once you know how to trade, the process is, minimal, right? Because you're just adapting something you see to your own, and then you're trying it out, right? You throw some money at it, take some notes, and then you just keep building on it. That's not that huge of a thing. When you're newer, there's a lot more legwork to it, right? Because you essentially got to build out a playbook and a data set, right? Because you actually haven't seen the setup, right? And even if you've seen it, you don't understand it. Now if I see one of you guys take some type of trade, I'm like, huh, right? I look at that ticker and then I find 15, 20 instances of that. You immediately start to understand like what's happening, right? And so, you may not be good at it right away, but you can adapt to it very, very quickly and then make it your own. In the beginning, that's not the case, right? Because you've just never seen these things. You got to apply a lot of data to it and then try it and tweak it till, you make it your own. So it does take a little bit longer, but now that's not the case. Once you know these things, it's really just small nuances. Because in general, like if you're, say, a breakout trader, all breakouts have the same handful of trades. They can look this way. They can look this way. You may tilt your head this way. You may tilt your head that way. You may draw this, that, right? But in essence, they all should have a handful of the same 4 or 5 tenets, and those are timeless. And so if you learn a new breakout setup, well, what is really, really changing? Maybe just how you're finding it or the type of stock or a specified type of entry point, right? I'm entering end of the day, beginning of the day. I'm entering as it breaks the opening range. I'm entering on the first pullback, whatever it might be. These are just small nuances on how you're trading them. And same thing, right? If you were trading pullbacks inside of a trend, well, all good-looking pullbacks really have the same handful of tendencies, right? Hey, I'm looking for an orderly pullback on low volume with no big, large gap downs, and right, I'm testing multiple levels of support and, so on and so forth. So in the end, like those are the parameters of a pullback. If you're trying a new pullback setup, they're still going to have those parameters. Those are timeless. And so what are you really doing? You're just adding 1 or 2 shades to it, and then it becomes your own.
Yeah. So your indicators are always, really cool to me because they don't always show up. Like you can't pull up, certain indicators that you use. So like I'm trying to think of an example, not like red to green, but like, the time of day or things like that. That's more like calibrating to the current market as opposed to like, you can't have a time of day, like, line on a chart and use that for your pullback. So it's like a lot of observation, but do you find that you use mostly like invisible indicators, or do you have a lot of indicators on your charts when you're trading, or what does it look like?
So in general, I am using indicators on my charts, moving averages, 9 EMA, 20 EMA, VWAP, volume, so you still have like a basic amount. But the big thing for me is that, depending on the time of day, your setups will change. In the morning, the market is just opening. You only have a handful of candles to really, really look at. So the type of patterns that you're going to find are going to be very, very short, right? They could be 3 candle patterns, 2 candle patterns, so on and so forth. As the day progresses, your setups need to be longer, right? Your pullbacks need to be deeper. Your breakouts need to have more basing. And so as the day progresses, you're going to have a different style of trading. So, you have your kind of your open, your middle, and your close. And those are all going to have really their own different types of patterns that you trade. If you do opening range or opening patterns midday, they never will work. I mean, they may be the opposite of working, right? Like it'd be such a small time where they could work because those opening patterns are based on sheer momentum and volatility and price discovery, where in the middle of the day, you wouldn't have them. Middle of the day is about consolidation, about retracement, about digestion, right? Not about price discovery necessarily. And so you have this kind of shift that happens as the day progresses. And so you need to be shifting your setups that also go with that.
What does your risk management look like? Is it percent based? Is it dollar based? Do you use moving averages or VWAP? Like, how do you manage your risk? And I think risk management could keep even a bad trader in the game if he properly manages it for a long time. So I think that's an important topic and something that I'm interested in hearing from you.
Sure. There's 2 different types of, risk to really, really manage, like when you're looking at like any given setup, right? So number one, like when you're looking at like risk management, how much you're willing to risk on a trade. One is just like, okay, how far is my stop loss away and what am I willing to risk per trade? So if I'm willing to risk $1,000 per trade, right, and I have a dollar stop loss, then I'm going to have, right, 1,000 shares. If I have a 50-cent stop loss, I'm going to have 2,000 shares. And so you have some kind of static risk management that you can apply so that if you have 2, 3, 4 positions going, you know exactly, right, if you get stopped out of these trades, what you're risking. So that's kind of your static. If you just have like a normal scalp type of trade that's like, you know, a B-level setup that's just your bread and butter, right? Like an income trade. But then, you know, kind of your second net level to that is like, okay, well, what are my probabilities to this trade, right? And so like as a day trader, I have a lot of setups that I do that it's just like income trades. I take this, I might make $1,000. I take this, I might make $500, you know, so on and so forth. And these are just, right, like simple breakouts or simple pullbacks. Hey, I'm bouncing this, you know, earnings play off of the VWAP, right? Just these are just things that are abundant that show up in thousands of times a day in the market. And you're going in and just taking it for what it is, right? A very quick trade that is high probability, but not necessarily high reward, you know, because they show up a lot. Then as you're going through and you're kind of segmenting your trades, you're saying, well, if this is one of my bread and butter go-to setups that is high probability, low risk, but also rare, right? Like if I hit this type of trade and I see it, right? Like for example, we were talking earlier about these blow-ups on Friday that often happen, right? Well, that is something where I might apply many times my risk compared to a normal trade. So if I was just doing some bounce off the VWAP, I want to risk $1,000. But if I saw, right, one of these setups, like not this Friday, but the Friday before, right, when SMCI pre-announces, right, their earnings date, and then, you know, it just got smoked out in the pre-market, and everybody's trying to scramble what's going on. It doesn't really matter. Bad news on Friday on these kind of high flyer names have been getting hit. So that's something that is a more rare outlier type of setup, right? So at that point, you're going to apply like a significant amount more risk to it because you only see it so often. You know, we're seeing it a lot, but still, right? It's once every few weeks, once a month, whatever. And the reward is, right, considerably higher. So in those particular cases, like I may apply 2 or 3 times my risk profile than what I would do on a normal scalp trade. And so you're going to start to up it as the reward gets higher, but also the setup becomes more unique and you trade it well.
Yeah. So your style, you know, you sound like you're a blend between discretionary, but then very systematized within that, but you're not like a purebred either way. It's, you know, you take the best of both worlds. Is that right?
Yeah, you still like where the edge is for us traders, right? Beyond like the machines and all of this stuff is being able to call audibles on the dot, right? Using your talent, your memory, your experience, and saying in real time, this is unique. This is an opportunity. I have an edge in it, even though I just came across my desk, right? It's just happening in real time. And being able to adapt to the situation and put some guts on the trade because you know instantly, right, that this is something that's a high reward, right, high expectation type of trade. That is where the edge is. And that comes through, you know, years of experience, years of collecting data, whatever it might be. But that's where, you know, we as like just discretionary traders have our money. You know, if you're just a system trader, then, right, everything is, you know, hey, 5% here, 10% here, whatever. But where the real money's made is when you can call the audible, right, in real time and say like, there's something going on with this thing, right? And I've got my hands on it and I'm going to increase my risk profile because I know this is something unique that could be big.
Yeah, it's funny because there's plenty of times where I'll create a watch list and the next day, half of those names won't hit my alert. I'll be really not interested in any of those names. And then like 3 names would pop up through scanners that I have intraday. And I'm like, this setup didn't look good last night. Like I saw it as I was creating my watch list, but now as it's moving up out of this base, it looks a lot better. So like it's, yeah, like you say, it's about like looking at it in the moment and being able to say like, this looks good, I should take this. And then you have your risk and you use, it's typically the same way. It's just like having that pre-watch list, so you prepared for whatever comes your way, as long as like having a like a flyer that just comes in an instant and you're like, yeah, this looks good, I need to take this. So I experienced that.
Yeah, in general, like, you know, you need tens of thousands of repetitions to do something right intuitively. And that's where like new traders, they have to get to, whether it takes you months, years, decades, right? This amount of repetitions of seeing certain types of charts and certain types of reactions, you can do it the fast way or the slow way. A lot of times people just turn on their intraday scanners, they hop in a chat room, right? And so they don't have necessarily the pattern recognition of sifting through thousands of stocks every single day for long periods of time. And so, you're going to need those reps at some point to be able to, in real time, make these kind of audibles. So it's just a question of like, does it take you a year? Does it take you 5 years, 10 years, so on and so forth. And so there's no like getting around that, the old school, like just turning on your charting platform and just going through every single stock you can. Like if you're going to go through it, like, dude, go through the, S&P 500 every single day. Go through the QQQs every single day, right? Go through your momentum scans like every single day. You can go through 1,000 stocks, 2,000 stocks. Look, by the end of the year, if you did 1,000 stocks every day for 365 days, dude, you've scanned and went through and analyzed 365,000 stocks. You may not be a good trader yet, but you're going to know a lot about damn charts, right? Now, okay, you know a lot about charts. You're going to know a lot about support and resistance. You're going to know a lot about patterns. You're going to learn a lot about momentum, what causes momentum, what it looks like, what it feels like, where those moving averages should be, what the volume should look like. You're going to have that. Now, you still may not know a lot about trading. You may not have the risk management down, the picture perfect entries down, but you got this. And you can build around that really, really easily. But if you try to build and have like really, really good risk management and really, really good this, but you don't have that, then it's all for nothing anyways.
Yeah, misconception is that like people jump in, they're successful after a few months, but it takes 3, 5, 7 years. And what you're saying now is how you get there in those years. Like doing all of that it all comes together over the years, and it takes time. Like even the most successful traders in history took them 5, 7 years to actually get things right and become successful. And by doing what you say you should be doing is how you get there.
Yeah. And so just because it takes, some people 5 years, you shouldn't go in, the mentality should be like, okay, all these people before me got this done in 5 years, but I now have these thousands of examples and game plans of people that went in stories of these people that did this in 5 years. So why can't I do it in 2.5 years? I've already can see what the pitfalls are. I can already see what the processes of learning are. I can already see what to do. So why not try to, right, take all of that knowledge that's before you now that you have access to that, 15 years ago, you wouldn't have had access to, and say like, let's try to do this in a much more efficient and smart manner and compress this timeline, right? Why go through 10 years of torture if you can somehow compress it into something shorter by just sheer legwork?
Yep.
Yeah. And so something that I always like about how Nate trades is that a lot of times, as like using one of those shortcuts, he'll take a chart that is running or something that's in motion, and he'll say, this reminds me of this. And he'll constantly do like a recent comparison, and he'll have such a solid read on something. When you're trying to get a read on something, do you compare the chart to something like else? Do you think about like, okay, if this is running in the morning or if it's running on the Friday, is it from the options activity? Like, the chart is the 2D, but the 3D, how do you think about that? Or do you just relate it to something else to try to, get that information?
So the best traders I've ever met have incredible memories. Discretionary traders, not the system guys, but discretionary traders. They get incredible memories. They can remember trades from 3, 4, 5, 6 years ago. If you don't have that kind of memory, that's fine. Study all your damn trades, right? Write everything down you can. Build databases. Use Evernote, whatever you can, and really have, things at your fingertips. But best traders I know, they see something, like we do this all the time. Like I'll see this earnings breakout and I'll be like, dude, PDD has earnings out. It dumped at the first tick on the gap last time and the time before. Like you'll know this, right? Certain stocks always have this kind of behavior. So you will see that a lot. That's an edge, like having a deep memory and going back like, yeah, man, this stock always does this. There's certain stocks, like even when I was trading small caps, there were certain stocks that always would run up like 2 weeks and then do offerings, right? Like having that memory goes such a long way. Right now, because we try to baby everybody, it's like we turn trading into like the lowest common denominator of like, hey, it's okay if you just learn this one pattern, you're going to be fine. And we're doing people a little bit of a disjustice, right? I was doing this too sometimes. Like people come to me and they're like, well, I'm not really that good with computers. And it's like, yeah, you don't have to be a computer programmer, but you got to learn how to use a damn charting platform, right? But so many people, right? It's like, oh, no, I don't do that. I don't do that. And so, I just tell them, well, this is probably not for you. Like, why does trading, right, have to be for everybody? If you're not good with computers, you can't figure out your charting platform, then find something else to do, right? It stinks to say, but we have to do that, right? So having like, certain databases, if you have a good memory, if you don't, building out your databases, taking notes, having journals, being really, really good with your charting platform, building out the ability to extract information very, very quickly is a huge edge, and you need it because in reality, you're trading against the richest, most crooked, most educated people literally in the history of the world. And so you're going against these people, so you better have everything ready.
Yeah, that's a great insight. And I feel like that conversation of like, not necessarily just natural abilities, but things like, what are the correlations between highly successful discretionary traders and like high memory or things like that. I feel like that's a conversation that just does not happen as much as it should, because you're absolutely right. That is, a huge factor in someone's success. And then also being willing to do things that you're not necessarily comfortable with at first, but it's like, want to be a basketball player, but saying like, oh, I don't really do defense, or I don't really pass, or it's like, well, in order to play this game, you need to have these certain aspects. And if, you're lagging in one, then, you can work with people and develop those.
There's always you can always, like with the little legwork, get around things that you're weak at. If you don't have a great memory, but you're a great note taker and you're really organized, you can compensate for that, right?
Mm-hmm.
If you're not really good with XYZ, well, you can find ways to compensate for it with a little legwork. But to come in and just say like, hey, it's okay. Well, it's not, right? Like trading is not more than just drawing squiggly lines on charts. The COVID times and the trade ideas generation kind of made it so it's like, hey, we see hot stocks, we draw lines on the top of them and we buy them and we make money. That day's gone.
Mm-hmm.
It died, right? Mm-hmm. There's more to it. There always was more to it. But for a handful of years, we didn't have to do that. But those years, the old school stuff is back.
Yeah.
Cutting out those day one gappers, because you mentioned it earlier also, and I thought about it. Like cutting out those small cap day one gappers are like the best thing that you could do if you're not a scalper or a trader, and you want to take those, like people are learning about these gap up continuation plays, and like if you think about it, they're very rare for them to continue because so many stocks are gapping up these days. Like you could catch one and be like, yeah, I just made 300% on this, but like you'll lose it all on the other one. So like you need to have a system, because the day one gappers, like you said, most of them just round trip at the end, and it's just not as easy to short because there's tons of chop throughout the day. But like I think that's where, for me at least, the daily came into play. It's like just focus on some daily setup. Day one gappers are okay if they're more mid-large cap, preferably on earnings or really good news. But like those small cap gappers, they're not even worth the headache anymore.
Yeah. And yeah, using that daily chart, like we were saying before, it's like you can have a broad move and then pick your spots within that trend to have the wind at your back. And that is just extremely helpful. But turning to more like some current events. So I don't know if you've been hearing, they've been talking about doing 24/7 trading, or basically making the stock market more like the crypto market. How do you think that would impact like your trading? Like, do you think that instead of being so much of a day trader, you would just run positions with stops if the market's open, so you can't get rugged or gapped down on? Or how do you think that would change?
It'd probably stink. I mean, there'd be probably a huge lack of liquidity at night anyways for 4, 5, 6, 10 years, before those markets develop. But it stinks because like I trade cryptos a lot. Like I've made as much money trading cryptos over the years as I did during stocks, during crypto's heyday. And one of the things that happens with cryptos, people always say, well, crypto market is more volatile. They got bigger moves than the stock market. And it's true, but there's like a huge caveat to it. A crypto stock, it goes up 10% in a day, but it's 10% over 24 hours. So it's really 0.5% every hour. Like and you never know like the period of time where it's like the speed up is, because you have 24 hours. In the stock market, a stock could go up 5%, but almost all the move often happens within the first hour or two. And so you have like a very, very defined time frame of where there's going to be volatility. Like even on slow days in the market, you still have action in the first 30, 40, 50 minutes, right? Like there's still like spikes up, spikes down. There's that volatility. And so you have like a very congested period where there's action. And so it's just crypto markets, they can move a lot, but it's not as fun because like we know first hour, 2 hours, there's action. 24-hour market, you just never know when the action picks up. And so you're just either left staring at it all day, or you miss it, or you need a whole set of eyes, a team of eyes on it. It's a lot more tricky. It takes a lot of the volatility out of it. So you can have big percentage moves, but it doesn't necessarily mean it's volatile.
Yeah. And I noticed like with the crypto markets in the past, a lot of times you would get like a bad headline out of China or something in like the middle of the night in the US market. So it might be like a lower liquidity period and you have this big news, and that's when you would get those like huge, drops that like it's kind of known for, but those are only during certain times. It might happen once every 2 months or something. You have one of those days, whereas the rest, like you're saying, it's much more distributed. It's just a higher movement market, but if you take it over the course of a day, it's probably similar.
Yeah. If just for lifestyle purposes, like I don't want to be up at night looking at that stuff.
Yeah.
Where do you live? What's your hours?
I'm in Florida.
Oh, nice.
I'm here now.
Nice. Yeah, I'm in the panhandle of Florida.
So you're trading regular market hours. So it's not like you're waking up 4 a.m. to trade regular market hours or anything.
No. I don't even do pre-market trading anymore. Not even in earnings season. It's just not. For lifestyle purposes, just don't like it. During the COVID days, I mean, like waking up at 3 o'clock every day for that whole year. And there was so much action, right? So you had to milk it while it was there. And then right after that period ended, we were all waking up and there was nothing to do for 6 months.
Yeah,
and
no news coming out, nothing.
It was like, it weighed on my brain. Like, it was like, I kept waking up because I was used to it. And then there was just nothing in the pre-market for 6 months once that COVID period time passed and you were kind of entering 2022. And it was so dead. And I'm still scarred from that. I'm like, no more.
Just watching paint dry. I
put in my dues. I have other things I'd like to do in the morning than that.
Yep. Yeah.
I think we're away now about the T+1 now. I believe May 28th. And I wanted to get your opinions on how you think that would affect the market.
T+1, what do you mean? Just settlement?
Yeah, settlement after a day. If that would change, we have these liquidity traps after a few days, the T+2, and now it's just next day settlement.
For me, I find a lot of the settlement stuff is more geared into the small cap stuff. For large caps, it doesn't matter, right? You're on margin. Everything is settling all the time and everything is shortable. And the small cap side, I think, I have no clue on how that impact goes, because even when I was trading small caps to the long side, I was never really shorting them. I'm just not a big believer in having all the specialty brokers and waking up for the borrows and all of that kind of stuff. And everybody somehow uses the same platform, but they're all different brokers. It never really cheesed with me properly. So how that impacts it, I'm really not sure.
Mm-hmm.
Yeah, that'll be interesting. Like you're saying, Judah, for the liquidity traps, because I think so much of it is when people are, having borrows, or there's, stocks that basically people can short for a day or two, but then it gets kind of called back to the broker. And, when that all happens at once, that can cause that liquidity trap. But if the time changes, then that'll be interesting. But Kunal, you brought up earnings season, and that's another kind of current event topic. You've talked in the past about how, earnings, it's like the report card, and it's such a pivotal moment for stocks. And then the reaction to that is also a big tell. So could you just share some of your thoughts on earnings season, how you think about it, how it can be a good, indicator or read on the market?
Sure. So in general, the best reward always comes during earnings season anyways, right? Because it is going to give you the list of the hot stocks for the next handful of months. But all big movement, like on a long-term basis, multiple months, starts from earnings, right? Like SMCI doesn't go to $1,200 without an earnings breakout. There was one at 100, then there was one at 300, so on and so forth, right? NVIDIA starts its move because of earnings, right? It's like these are the catalysts, the real things. So even though we're into technical analysis and we're chart people, those techniques and strategies work best when you are still applying them to stocks with some type of fundamental catalyst, right? So you have the wind behind your back. But what the earnings season will tell you too is just like a key gauge on the market. Like, is it a risk on market? Like, are people paying up for earnings? Are people paying up in price? For example, like in 2022, in the beginning of it, every time a stock gapped up on earnings, it got freaking rugged, right? Because the market was distributing. The market was distributing. It was getting ready to start, right? At least on the tech side, it was ready to get started to deflate. So every single stock gaps up on earnings. It beat on earnings. Earnings surprised 30, 40, 50%. Revenue surprised 30, 40, 50%. All right, numbers look fantastic. Boom, still rug. Boom, still rug, right? They're liquidity traps in its own way, right? The hedge funds, the big guys see the gap up, they're selling, right? And so it's giving you a clue on essentially what's happening for the rest of the year, right? That's your tell. Like, hey, when people are taking earnings beats, something that's a surprise, and selling into it, people want out of the market, right? And so you're starting to see that. And then vice versa. What did we start to see in the beginning of 2023, right? It started with Netflix and NVIDIA and Meta, right? In the first January earnings in 2023, right? All of a sudden, they start gapping up. They were in the dead for a while, right? And they've just been downtrending for months and months and months. All of a sudden, Meta has earnings out. Everybody hated Meta, right? And in the end of 2022, 2023, they hated it. And all of a sudden, the earnings come out, and people are like, oh, this is not so bad, right? It's considering what price it was at. And so now all of the sudden, the price action is changing. People are willing to pay up, right? Stock gaps up 10%. It doesn't fade off. Not only that, but there's follow through on these names. Well, okay, like the market is shifting, right? And you'll start to see that before it really shows up necessarily in the indexes as like some quantifiable, certifiable trend. All of a sudden, right, these key names are going through. And we're seeing a little bit even right now, like this earnings season has been a little bit more of a mixed bag, right? Meta takes a dump, Google pops off, Microsoft does nothing, right? These stocks have been gapping up on earnings now for 3-4 cycles. And so now you're starting to see, right, a whole different kind of mixed bag on things, because probably maybe a lot of the easy money, right, on these bigger names has already been done. So now what we want to be doing is seeing, do we have any new leaders coming out, right? Are there any new tech stocks, any new biotech stocks, any new something, right, that has these earnings gaps, blowout earnings, a big volume, but then the subsequent follow through, right? Does the chase come on in some new names? That will give us a tell, because as you guys have probably seen, right, the IWM and right, anything that's medium, right, has been still dead to the world, right? Which just been the QQQ for the most part for a long period of time. So, this earnings season, we'll get some good tells on this stuff.
Yeah, I totally agree with everything that you're saying. And that's, Judah and I did a Sunday scan a couple of weeks ago, and we were talking about this exact same topic of just, you can get a huge read on the market. When things gap up, are people taking that liquidity? Is this the best thing that's going to be happening for the next couple of months? And if so, I want to use that to get out. Or is it like a turnaround story, or like you're saying early 2023 with Meta, gapping up 18% on, earnings that aren't super different than the past. So it's like, this is the cheapest it's going to be for the next couple months. So I want to get in. So I love that conversation. And I just think it's so useful for traders to get a read on things. So excellent. Yeah, we've been covering a lot, and I hope that everyone is enjoying this conversation. And a reminder to like and subscribe for the video. And Kunal, I want to ask you a little bit about your idea of the millionaire's run. You've talked about this before, and just this intense period where people who are, developing as traders, they're really going for it. And could you just kind of share that notion, and then how people might go about that in a good or a healthy way, or the best way possible? I don't know if there is a healthy way sometimes, but
yeah. So in general, like every businessman, businesswoman, trader, right? They have that sweet spot where you have like that mix of, right, the youth of the energy of still being able to push it, but now you also have some level of experience, right? You don't need tons of experience, but some level, like, right, all cool stuff usually starts with young people anyways. And so when you have that chance, and it's usually, right, okay, you're losing money, okay, I'm profitable, right? So a lot of times once somebody's profitable, maybe they're even making $500 a day, $1,000 a day. Well, that's a whole different lifestyle for them, right? So a lot of people, they act like they made it, right? Like, hey, I made it. I make $1,000 a day. I can buy a nice car. I can do this kind of stuff. And they go out a lot more. They get a lot more comfortable. They buy a lot more things, and they act like they make it. But that specific period right there is really when you want to be pushing through with your trading, building other businesses, whatever it is, Ken, that you have the energy to do, because you won't always have it, right? And so we all have that spot where it's like, we've got the experience now and we still got the energies. We're not burnt out. And that's where you really want to make kind of that millionaires run, where you can give it your all for a handful of period of time, because you may not want to do it later. Once you have, kids, you have different lifestyle, right? Like you have more responsibility. You're not going to be able to hold yourself up in front of the computer for a long period of time. And so there's a sweet spot there, like right after you become profitable, where I think it's like really, really important not to get seduced by success, right? The seduction of success is, I've fallen through this myself. You start making $1,000 a day, you can afford a lot of more pretty girls than Bart has for an Indian guy, right? Like, we're getting no chicks. And so, you can really get seduced by all of this. But you gotta, like, once you have a little bit of fun, you gotta put your, head down and go through it, because you have a very, very short window. Once you have 10, 15, 20, say a lot of these people that have success, but there's a point in your experience where you've had success, but you don't want to take on as much risk anymore either, right? So there's a sweet spot that year 2, year 3, year 4, year 5, where you're starting to be profitable, make some more money, where you still have that appetite to like work, take on risk, where you can shake it off. Like right now, like I'm about to have my first baby in a few days, right? Like I'm recently married. I can't do that right now, right? I'm about to be basically a stay-at-home dad. Like, it's like, I'm not going to be able to do that right now. But 10 years ago, right, I'm like, I got nothing. I'm in an empty house, right, by myself. Like, you have a sweet spot of like experience, youth, energy, and you got to go for it, because you don't always go for it. Just because you have a lot of experience in trading doesn't mean that's the time you make money. A lot of the traders that you see, like, that are like super, that have made good money and been really successful, you find that they often did it in their younger age, their late 20s, their early 30s, right? It's very rare you're seeing them like, I'm 55, I made my first million, I turned it to 10 million and 20 million, right? It's like there's a sweet spot there. And I'm not trying to be ageist or anything like that. It's not necessarily about age, but just where you are in the cycle of a trader. Like, once you get profitable, you have these handful of years where you really want to knuckle down after you're profitable and just try to push it through. Like, see where your potential lies, like see like what you have left. Everybody has some type of ceiling, and they can even push past that ceiling, but you want to start testing it out and see if you can do it. Because if you don't do it during that time, dude, life gets in the way, your health starts to go, you may need more sleep. Dude, I lived till age 38. I needed 4 hours of sleep a day from right age 12 to 38. Now all of a sudden, right, it's I'm getting a lot more sleep than I used to. Right? I need to eat a lot more than I used to. I need to eat different. I need to do all this stuff. You have all these things that happen, but there's that sweet spot. If you can do it, you make your millionaires push, right? So any of you guys that are learning how to trade, when you get profitable, slowly start to increase it. Like, if you're doing $100 a day, the next week, try 120. The next week, don't go crazy, but next week, try 150. The next week, try 180. Slowly just increment it, and start pushing your hours of studying. Get good with technology. Build as many filters as you can. Get as good with software and algos and news and anything you can, and just keep building on it, and spend those next 2-3 years like seeing like where your talent takes you. You'd be surprised like how much you can get done in a very, very short period of time when you have the energy and will to do it.
Yeah, I love that. And there's a great quote that says, do what's difficult while it's easy. And just like you're saying, at certain cycles or certain parts of a trader's career, that is the time to go for it. And that is like, it's the best layout that you're ever going to get to really, take your shot. And so taking advantage of that and really going for it, for anyone who's kind of like, debating of like, do I really go all in on this? Or it's like, are you going to do it at all? And if so, this might be the best time. And so you kind of have to, have some confidence in yourself and just go for it, and you'll make plenty of mistakes. But yeah, I love that conversation. And you brought up, you and Nate have been friends for a long time. And I really enjoy the fact that you guys, you have different services, different ideas, but you've always been like collaborative. And it's not so much of like one or over the other, but it's more just, you guys have your niches, you have your, things that you like to do. And I really enjoy that you guys have been friends and, just helped each other a lot along the way. And so kind of on that note, who are some of like the best traders that who are some that you admire and like, that you might even aspire to, be like or trade like or other things?
Oh man, there's so many good ones out there, but I really like for my trading style, like I really like the guys at S&B Capital. I think like that's my particular niche. So I just, I really like always like I'm an earnings guy. I like trading momentum. I like trading trends. And so like I love their style of trading. Like I always read out and follow all their stuff. On a personal level, like I love Mr. Cantankerous, Mr. Wood. He's more of a short seller, but he can trade all sorts of stuff. And he's been a good friend of mine for a long time. And like, dude, he's super inspiring. St. Louis Phil, dude, he's not only just a good looking stud with abs and a bunch of kids, but like a hell of a trader, right? Like he's a hell of a trader, great guy. So like, he's also somebody I really look up to because dude, he's an awesome guy, but he's just an awesome trader. And he's like, you don't even see any of like the kind of degenerate tendencies that you do from a lot of us day traders. Like he's just like got this awesome family and stuff like that. So there's just so many good people out there. Like, but I really like, I love those guys. And I love people that are out there, like just pushing it, man. Anybody that's out there that's just really, they're pushing it. Like I'm into that. Like I want to see these youngsters go in. There's like some guys on Twitter that I noticed that are a little bit younger. Like there's a guy, TSDR Trading. He came through my class like 4 or 5 years ago, and then he started his own service. And I look at his stuff, and I'm like, fuck, this guy's pretty fucking good. He's taken like a lot of stuff I taught him and just did it 10 times better. And so there's just so many people that are like, with all this information out there, people are making some real moves here, and it's pretty cool to see. And the other thing I think is really interesting that I'm super into is that, now there's so many good woman traders out there. When I started my business, and maybe it was my age and myself too, but like all my customers were 20 young men in their 20s, in my last class, almost there was like over 50% of the traders were women. And I think that's actually pretty cool. And so like, I'm really impressed by like Humbled Trader. I love her YouTube videos. She's got like an awesome personality. Like she's just so bubbly and makes awesome videos. And so there's all these women traders out there too that I think there's a lady, Dr. Mancy, that's like, she also trades like a lot of earnings breakouts and stuff. And I think that stuff is really cool too, to see like these ladies come in hot.
Mm-hmm.
Yeah, definitely. And I've noticed that, like you mentioned before, a lot of these young guys who come in guns blazing, a lot of times they do have some of the degenerate tendencies or like the gambler mentality. Whereas a lot of the women who come in are much more patient. They're much more, particular about and they can, just do fantastic trades. So yeah, I think that's a great trend that we're seeing in the trading world. And I know that it's going to continue.
Yeah, they're more sweet with the markets.
They are. They got a lot going on, man. It's just cool to see. Like, I mean, in my chat room, like the women, they talk like dudes out there. Like, like they're hitting. Like, I got a whole group of girls in my chat room. They're like 45-year-old moms that are like cock balls and they're trading small caps and stuff. And I'm like, man, this is amazing. It's like all the guys are scared of small caps now, and the women are coming in hot.
Oh, man. All right. Coming up to the last section of the podcast, we're going to pull the earnings or the winner from the contest. So every week we run a contest for people to leave a takeaway in the comment section. And for this week, it is Travis Tyler QK7RF. Congratulations. You have won a free month of Investors Underground. So email tyler@investorsunderground.com or webmaster@investorsunderground.com, and we will get you set up with that. So Kunal, we have a couple of like rapid fire questions
Cool.
that we're going to roll right into. So the first one, what drives you absolutely nuts on Twitter?
Oh, I think what drives me nuts on Twitter is the hating on other people. Like, it seems like people are like bothered by other people's success. It's like, it's just Twitter, like people think of Twitter as like this toxic place, but like I met most of my best friends on Twitter. My business partner I met on Twitter. People like think of it as this toxic place, but in like there's all this kind of hating going on. But if you really dig past that, man, Twitter's an awesome place. Like I met a lot of damn good friends on Twitter that I would never even have. I may have met more friends on Twitter than I have in real life, that are my friends in real life.
Yeah, you can kind of make it your own. If you focus on all the bad stuff or the good stuff, you can kind of get what you want out of it. Okay, great. And then on to the next one. We have, what has been your best purchase under $1,000? I'm assuming it's probably a stroller if you have a baby coming up, but what's been your best purchase lately?
Best purchase under $1,000? Those USB Dell monitors. The ones that you can put, like, they're so thin, you could fit like 3 of them in your backpack.
Yep.
And you can hit the road. You can hit the road. I
Nice.
got 3 of them, and they were like this thick when you stack them all. I went to Switzerland for 2 months this summer and just like lugged these things around, and probably they're about $200 each.
Yep.
Live by those things.
That's awesome. All right. And then on to the next one. We have, what is the best habit that viewers can implement starting tomorrow?
Ooh, take a walk in the morning. I think that was the game changer for me. Instead of spending time during sitting and staring at the computer during pre-market, I go for a walk on the beach, FaceTime my mom, do a little this, a little that, and just walk. I'm not like trying to get in like some crazy mental space. I'm not Yoda or anything, but right, just like taking a nice walk like in the morning, man, getting a mile, 2 miles, whatever, 30, 40 minutes. Dude, you feel so much better like when you get started to work. Like you've been out there, and once you do a little bit of like that kind of light exercise in the morning, you're more likely to do it again later in the day, right? You're like more likely to get out and, pump some weights, lift some things.
Yeah, absolutely. And hopefully your mom is a little bit more accepting of your trading now after all these years.
Got no choice now.
Yep. You're in too deep. All right. And then what is a great piece of advice that you've personally received from someone?
Oh, that's a really, really good idea. The best piece of advice that I personally have gotten, like, over the years, and this from like, multiple mentors, is always have multiple streams of income. This has like helped me a lot over the years, like buying other businesses on the side, investing in other stuff. Dude, it takes your trading to next levels too, right? When you have money coming in from a lot of different sources, when one of them is soft, it's not the end of the world. Because like what used to happen to me is like, if trading is just trading and that's your life and that's your only interest, then you have 3-4 bad days of trading. It's like you yourself are a loser, but therefore I lose on trading. But you know what? It typically will even out a lot of your lifestyle. It's like, okay, I'm investing in, like even Nate, right? I'm investing in real estate. I'm doing these kind of things, right? Once you start doing some of that stuff, it expands your horizons a little bit, but also makes your trading better. But you also just feel better about yourself, right? Like you have a few losing days in trading, you knock back 30, 40 grand in losses. It's like, it's not the end of the world, right? Like you're a businessman, you got a lot of things going on. So try to, when you have the time to do it, learn as much as you can, read as much as you can, and get your hands in as much money as you can, like while you can, because you're not always going to have the energy to do it.
Yeah, that's great advice. And finally, what's your favorite thing to do when you're not trading? Like, what do you do outside of all this work, all this business? What do you like to do?
Dude, I live on the beach. I love being outside. Like usually I dip in the ocean a couple times a day. Me and my wife, like we go like whenever I get like a couple hours off, we just walk out straight out the door. We go swim and just frolic around. And dude, you can never have a bad day if you spend some time, outside.
Yeah, I definitely agree with that. So we've done a lot on this podcast today, and Kunal, it's just been so much fun having you. We've covered crazy good topics, and just thank you so much for coming on. And I look forward to seeing you again at Traders for a Cause this upcoming year. And Judah, any closing thoughts that you have?
No, I think you touched up on everything, Kunal. That was an awesome conversation that we had. And yeah, like Chris said, I can't wait to get back to Traders for a Cause and see you again.
All right. I love you guys, man. Peace.
Thank you.
Thank you for tuning in to this latest episode of Trading Takes. Don't forget to hit the like and the subscribe button. And if you enjoyed this conversation, please check out some of others with some great traders. Thank you for watching.